Hi everyone, let's go over my low time frame and micro bearish Elliott Wave scenarios on Bitcoin. Starting with the first low time frame bearish scenario, where we're looking at a finished wave 1 in a leading diagonal structure where all of the waves were 3-wave structures, followed by a wave 2, which is a zigzag ABC, which is the most common structure in a wave 2, hitting the 0.5 Fibonacci taken from the high to the low of 1, which also is a common target for a wave 2. For now then, the beginning of a bigger wave 3 towards the downside. In this scenario, the invalidation is taking this high over here at 29.6k, and the only thing that is not that nice about this scenario is the time of this correction, the time of this wave 2, because you can see a vertical line on the chart, and that is a fib time taken from the high to the low of wave 1 to compare the time it took to develop wave 1 with the time of this wave 2. And usually corrective structures finish after the 0.382 fib time. That also counts for a wave 2. However, this wave 2 over here finished far before the 0.382, which is incredibly rare, and at the moment gives a bit more probability for this corrective structure to not yet be finished. If we, however, zoom in to this structure over here, we're going to the micro. And over here we are then looking for a wave 1 to the downside, followed by a wave 2, and now you want to see an impulsive structure to the downside in a wave 3. That also means that if price is moving towards the downside on a very high volume, because for a wave 3 you definitely want to see volume increasing, that we have to be wary of the support area over here around 29k. Observe the reaction, not catching knife, no FOMO, no YOLO. Observing the reaction over here, and based on your plan, strategy, entry requirements, a potential long could be an option. Or in this scenario, maybe nothing, because in a wave 3 you expect it not to hold for lower prices. In this scenario, however, you can again see a fib time on the chart, and this is a fib time taken from the high over here to the low of this wave 1 to then the exact high of the wave 2, and you can see that this corrective structure was 14 times longer than this wave 1, which also is extremely rare. Another thing to at least keep in mind is that if this is a 1-2 and then a 1-2, then you can see that the shape over here is not really looking like a very nice diagonal, because most commonly in a double 1-2, what you want to see is a wave 1, wave 2, followed by another wave 1-2, and then a move to the downside where the wave 1s and the waves 2 create a contracting diagonal. However, this second wave 1 did not take the low of the first wave 1, which then again lowers the probabilities at the moment. If we then zoom out and go to the second low time frame bearish scenario, then we're first looking for a move back towards the upside to finish wave 2 before then a bigger move to the downside in a wave 3. In this scenario, the pivot low for wave 1 is the same, but the zigzag is then only the first structure, and then a 3-wave structure in wave 2 ending after the 0.382 fib time. So time-wise it also matches nicely for then continuation to the downside. In this scenario, we then have a double top at 29.7k, which can be an interesting target to take some liquidity for then a move to the downside. But we also have an incredible resistance area over here, which is sitting between 29.7k and 29.8k for then the potential high of 2 and a move to the downside. The invalidation of this scenario is if price takes this high at 30.2k. If we then look at how we can make this wave 2 extend to after the 0.382 fib time, then this is a scenario I'm keeping my eye on. This is an ABC expanding flat, and what you're looking for is a 3-wave structure in A, a 3-wave structure in B, for then an impulsive C to the upside. So it's an ABC expanding flat in then a wave 2 for then eventually that 3 to the downside. Now in this particular scenario, the most common target area for a wave B is between the 1.236 and the 1.38, pulled from the low to the high of wave A. As you can see, it is just below the support box that we have over here around 29k. The 105 is a rare target for a wave B, which is positioned inside the box, but the most common target is below. So what I then prefer to see is maybe a wick inside, but not too many candles closing below this support area, because for me that would be more bearish. I mean, this is basically the support area I have between where price is now and the lows, which would invalidate this scenario in my opinion. If we take these lows, I can imagine we continue to the downside. If we look at this structure being a three-wave structure and then a wave A, B looking for a C to the downside, then the most common target for wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of B over here, which as you can see has at least partly a confluence with the most common target area for wave B, the 1.236 in blue and the 1.236 in white at the same level. That is good to see, but also again the one-to-one here overlap with the support area. So how price is going to approach this support area and what it does over here is going to be very important for then maybe that bounce to the upside, where then I'm looking for a wave C to the upside towards this resistance area over here around 29.7k. If we look at the CVD divergences, we have the bigger bearish CVD divergences here, lower high on price, higher high on the CVD chart, which I'll show in a second. The bullish CVD divergences here more locally played out as this high got taken, which is the target, as you can see a wick very nicely. So we can now remove this bullish CVD divergence from the chart, and currently with the drop you can spot again bullish CVD divergences. However, first of all, it's the second CVD divergence with this pivot, because the first one was this one over here, so now price is moving down again, so that means it's the second divergence with the pivot. And also this low has been made on very high volume, and that is not really preferred. A CVD divergence with a very high volume low in the trend over here, you can see the candle is never like very high probability, so therefore this is definitely not the preferred CVD divergence. And the first one played out, so if you caught that one, that's very nice, but this one is definitely more risky. And it's just the more times a pivot has a CVD divergence, the lower the probabilities, but also if it's a CVD divergence with a high volume candle, it also lowers the probabilities. So if we then look finally at the probabilities of these bearish scenarios, then currently, mainly based on time as well, this scenario over here where we have an extended wave 2 going past the 0.382 has a higher probability in Elliott waves because of time. Elliott waves don't only have a price relationship but also a time relationship, and such a short corrective structure would be incredibly short. It's not like invalidated, it's not impossible, it's a probabilities game, and this is just a lower probability than having an extended wave 2, but it all depends on the reaction that we get around this low over here. And if it holds and we see what we want to see, maybe a market structure change, bullish divergences in whatever you're using and whatnot, then potentially, you know, you can look for that move towards the upside. But if it just does that, well, yeah, there's no trade, of course, if it just dumps towards the downside. So we have to keep observant, but the probabilities are at the moment higher for price to at least find its way once more towards the upside for wave 2. And then also, that's what I wrote in the micro over here, is in the micro scenario we are looking for this lower target box, observe the reaction here, and then potentially look for that longer corrective structure back towards the upside, and that depends on the reaction we get locally. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I see you at the next one. Bye bye. And by the way, that was my alarm.